Hey, how's it going, guys? This is Kyle from Investishare. I'm going to go over the yesterday's market conditions in combination with today's market conditions and see how they're going to work in confluence with each other for a potential larger move. There is a couple scenarios that we got to prepare for. There's a bearish scenario that's kind of getting ready to play out right now, and then there's the more bullish scenario that could actually bring us to potential new all-time highs. So I'm going to share my screen really quick so you get an idea of what I'm looking for. I'm going to talk about yesterday's market conditions and confluence with today's, and I'm going to show you how we can use them to our advantage. Let's dive into it. Now, this is the 15-minute time frame for Bitcoin. And we were getting squeezed inside this pennant structure right here. And because we were able to draw this structural formation, we can actually pull a fixed range volume profile to give us an idea of what is the strongest point of control, value area high and value area low that we need to watch out for when it comes to doing our trades. You can use this indicator in combination with any strategy in the world. So I highly recommend using this indicator. It will help you find out what kind of barriers you have with your strategy. For example, you could have a target that's a little bit beyond reach, but if the value area kind of gives you an idea of what limitations you might have with that target like that. And I'll show you what I mean. So if we were looking here, for example, we had price action, break this downtrending momentum right here. And I was actually looking for a long opportunity. I was trying to give everyone a signal on a potential long opportunity, but I had to look elsewhere because the risk-reward ratio wasn't very safe. So I looked elsewhere, and I'll show you what I looked at and the reason why. So we had this downtrending momentum. Your goal when it comes to drawing downtrending momentum is try to get as many touch points as you possibly can. And it's going to give you an idea of preparing for the change of character that matters the most. Because you can have a bunch of, change of characters within this price action. But when it comes to trying to find one that's going to have the most volume-backed move, you kind of want to see it happen in confluence with the break. So like if we zoom in here, we can see we kind of had an ascending double bottom right here. Or more likely to be seen as a downtrending inverse head and shoulders if you're a formation-based trader. Now, we had this swing low that could have been a great stop loss guard, or you could use the average true range if you want to give it a little more breathing room if you're someone who has a hard time trying to find a good spot for your stop loss. And we were waiting for a candle to close above this level. I preferably would want it to have the change of character down here in this area. So we knew we had about 11-hour window when I was talking about the market conditions in the crypto signals channel. But we ended up just pumping straight up after we hit, the golden pocket. And now this is the change of character that a lot of people would take action on for a long opportunity. And you put your stop loss here. But if you're looking at the downtrending level of resistance and you see that as a potential barrier for reaching any targets, like a lot of value areas, we'll be looking at the value area high, and anyone who's a value area trader and was not paying attention to the downtrending resistance, kudos to you, because you would have made really great profits off this, and your risk to reward ratio when you're measuring that target would have been, let's take a look. So if we have a long position tool, you would enter on this 15-minute candle close. Your stop loss would be right here. A formation-based trader would look at this as a potential limitation, and you'd see a 1 to 1.24 risk to reward ratio, and that kind of makes you step back and kind of stay away a little bit. We did have a really strong reaction there. We had a lot of people sell off, but that sell wall that was there ended up getting eaten, and then we ended up breaking to the upside and continued off to the value area high of this structural area. And that value area high, it's created a strong horizontal level of resistance. Now, if you were to target the value area high in this trade scenario, you would have had a 1 to 1.3 risk to reward ratio, meaning you are aiming to gain 3 times more than what you're risking to lose. And if you're someone who's got their risk management under control and you have your good budgetary system, where, for example, I trade with $100,000, I'll be risking on average to lose $1,000 to try to gain $2,000 or more. And so long as I have a win rate of above 40% or more, I'll be profitable at the end of the month. Luckily, with my rules, I'm able to get a much, much higher risk, win rate. But I actually decide not to take this trade and not to give the signal because of that barrier that was in my face, and I wanted to look for something safer for the community. Now, if looking at the present price action, you can see that we had this horizontal level of resistance and support at 70,000. This is also a psychological level of resistance and support. When you have those rounded numbers, when people are taking profits, they love to just type in the rounded numbers, especially retail traders. They'll just put in a rounded number like 70,000, 60,000, 71,000, stuff like that. So you got to look at those rounded numbers, especially from price discovery and prices that we've never been to before. You got to watch those rounded numbers because a lot of people will put their limit orders at those locations and then just like set it and forget it kind of thing. But anyways, right now as we speak, we have a potential short and long opportunity being prepared. We have a double bottom structure being formed off of this downtrending level of resistance, trying to maintain and flip as support, but combating that level of the psychological level of resistance at 70,000. So what we want to see, if you're looking for a long, it's a little bit high risk, you could enter a long if we break this resistance and you can target the value area high again. If we're looking at a long position, we need to have the candle close, and we want to see it act as support above this level just because of how young the structure is. And we'd have our stop loss below the swing low, and you would target up here, and we have a 1 to 1.63 risk to reward ratio. So some people would put in 40% less funds into a trade like that to try to maintain a positive risk to reward ratio, but I usually just stay out unless it's a 1 to 2 or greater. And I'll just look for something safer. And if you're looking for something safer, really what you got to do is go through your list of altcoins that you're comfortable with trading and see if it has a lot of Bitcoin pairing. And you can do that by looking at coinmarketcap.com. If they have a lot of Bitcoin pairing or a lot of network token pairings like Matic or Cardano, Avalanche, stuff like that, they are greatly influenced by Bitcoin's price action because of their liquidity pool pairings. So what you want to look for is just an asset that has a safer risk to reward ratio, that has a good bullish confluence breakout at the same time Bitcoin breaks its resistance, and you can get yourself a really good trade that's a lot less risk than this. And if I go over to Gala, for example, rather than doing this trade that would have been really great, we went into Gala, and Gala had an inverse head and shoulder structure right here. We had this left shoulder here, a right shoulder here, and this is the head here, and we just bounced off of a really critical level of support. And the measurable target would bring us into this this supply zone right here, or between 62 0.06264 up to 0.06386. I don't know, the decimals are kind of crazy. That's why I like trading like higher market cap stuff. But anyways, what we waited for was a candle to close above this area so we can get that change of character that really mattered. And we would put our stop loss below the right shoulder, and we would target up here. So that's what we did. We gave I gave a signal based on that. It had a really good risk to reward ratio. But just because something has a good risk to reward ratio doesn't mean it's going to play out, right? So luckily, we got out when market conditions said that this is basically as far as we're going to go, and we're likely going to get stopped out. So as we created the new high, I adjusted my stop loss to the new swing low here, and I knew like once Bitcoin hit its golden pocket, and I'll show you what I was looking at before, and confluence with local resistance, we knew that okay, we got to get out. There's no more run for this move, and we decided to get out at small gains and rather than accepting a small loss. So I'll show you what I mean by the confluence of why we use Bitcoin as a tool to tell us to get out. If you look at this most recent swing high to the most recent swing low, and you pulled your Fibonacci retracement tool, you can see that we hit the value area high in confluence with local resistance here and the golden pocket, and we started to lose momentum. So we knew that it's going to be a likely scenario that we're going to get stopped out if we stayed in our existing trade. So you can use Bitcoin as a kind of like a fortune teller of what's going to happen to your altcoin trades. But yeah, so what I'm preparing for today, I can't really look at this long and think that it's going to be safe. But if we actually get a higher high today, like right around 71,324, there's a lot of liquidity resting at this area right now. So if we get this, that liquidity is basically there as a form of liquidation levels from high leverage traders and stop losses. And it's going to force a rebuy in the market, and it's going to pump us back up to potentially as high as this level. If we end up breaking this resistance, then we have a really good chance of creating new highs, like new all-time highs. Because between this gap and this area, it's honestly, it's going to be a relatively quick move, and it doesn't take very much money to get that new all-time high. Anyways, now for the bear scenario, what we want to kind of see is acceptance backs inside the structural area and confluence with a lower low. So what I mean by that is if I get a horizontal ray tool, I would set an alarm for basically 69,566. If we get a 15-minute candle close below this, basically we can target, while looking for local levels of support, we can target as low as this uptrending level of momentum. And that could be honestly a really, really great trade. So looking for a short is based on the current price action. You know, if we don't create new highs here and we end up getting a new low instead, we would have our stop loss above this most recent swing high, and we would be targeting down here. So it would have a 1 to 1.35 risk to reward ratio, depending on how the candle closes, of course. If you find that the risk to reward ratio is getting a little bit too high risk, then don't jump into it. Don't jump into a giant, red candle thinking that it's going to be a great opportunity, especially if it eats up way too much of your risk to reward ratio. Now, if the candle closes below this level and we end up getting acceptance into this previous value area at the same time, we would need a candle to close basically around at this level or lower, and we'd have a really safe high volume drop, and we'd just be watching basically 68,681 along the way down, and then we'll be targeting this previous low here in confluence with this uptrending level of support. As we speak, it looks like it's doing the long opportunity. So basically, this could invalidate the stop loss for sure. It's happening right now as we speak. So the long opportunity that we were talking about before, basically it's relatively limited. So I wouldn't be jumping into this because of the risk reward ratio is like a 1 to 1.6. And be watching the value area high again is potentially acting as resistance. But if we end up getting that higher high here, guys, it's going to stop out some liquidity, and we'll have a really good move, potentially back up to the 72,800 level. And what you would want if you're trying to look for a safe trade opportunity is kind of want to hope for a little bit of rejection before breaking and creating a new high. That way you can have a good stop loss guard and you can jump in on that. But that's pretty much it, guys, for the market conditions for Bitcoin. There's a halving events coming in 7 days. Normally, if you look at go back in time and look at all the different halving events that we've had throughout Bitcoin's history, we have a very, very low amount of volume, like preparing for it. And then within a week or two, we have the explosive move, and it's always to the upside. We could have a little bit of pullbacks from miners, basically going out of business because they weren't preparing for the costs to go up for mining Bitcoin, because the rewards are going to be cut in half, and until the price starts going up, some of them might not be profitable or prepared for the change of the difficulty and all that stuff. But anyways, guys, if you have any more questions, you can reach out to me on Discord. You have yourself an amazing day. I hope this helped you out. Stay safe. Make sure you stick to your stop loss budget. Safe trading equals profitable trading. That's our motto now. So I'll see you guys in the next one. Thank you. Bye.
Hey yo, I'm all about the crypto. In case you don't know, it's the hedge to inflation, the craziest sweep on the nation. No baby, every blockchain and created the same, but the learning curve feels like a bullet to the brain. Let me